What's up, ladies and gentlemen? Welcome back to PokeMarketLab. You saw the title of the video, and that's pretty much it. The key to investing is just not giving a crap, and that's really the video. So we will see you on the next one. Just kidding. Obviously, there's more to it than that, but not really. I mean, it's kind of tongue-in-cheek, but it is really true. I mean, this is true of regular investing as well as investing in Pokemon product, sealed product specifically. But it's really as simple as buying good product, and that's kind of the key here that we'll talk about in a bit. Buying good product, putting it on a shelf, and just forgetting about it and not caring about it. And sometimes the more you care about it, the worse off you are. The more you care about either the product or the price, and you get emotionally attached to it and end up making decisions that are not in your best interest from a investing standpoint. So in this video, we're gonna talk through the difference between an active and a passive investor. We're talking about Pokemon, collecting gear, Pokemon sealed booster boxes and sealed product. Specifically, this technically applies to any type of investing. And as with all people talking to you about investing products or investing in general, just make sure you do your own research. This isn't advice in terms of what to invest in. This is just, talking about methodology and how you might approach any type of investing. And with that, let's get into it. So passive investing, in my mind, is really, this is how it's defined: buying and holding sealed product for a long period of time and relying on that natural scarcity and nostalgia to drive prices. One of the benefits of investing in Pokemon boxes is that, unlike regular stocks, they deplete the volume, the population of the product out in the market depletes over time. And this is a result of people opening boxes getting lost. Just so much risk out there to the box population. It always depletes over time. And I'm talking once we get past the reprint window, right? So when I talk passive investing, I'm talking really need a long period of time to take advantage of most of the upside potential of a product. And that's really one of the main differences between passive and active investing is trying to force the margin by doing active investing, trying to force that, trying to buy product really low and time the market and sell it at a point where you can kind of force your margin or force a return. Versus passive investing, it's really just waiting for time to do its thing, and it takes such a little commitment. And that's the biggest benefit here, is a minimal time commitment. And you're not as reliant on the initial price of the product, right? If you're talking about many years of growth and high percentage growth, saving an extra $5-10 on a product isn't necessarily that big a deal. Versus if you're active investing and your margins are a lot slimmer, because they're typically going to be, then every percentage point matters. And also, I want to talk about, when we talk about, there's so many YouTube channels and programs and people out there that put out, hey, you got to do this, you got to do that, buy this, buy that. Please make sure you're making your own determination. You're making your own plan. Even with myself, right? I'm just trying to put a little wisdom out there on the internet. You cannot just listen to me and do this. You cannot just read a book and do this. There is no shortcut in life. There is no channel out there that's going to tell you and give you the secret to buy, what to buy, when to buy it, at what price to buy it, and make all this money. Okay. You have to make your plan. You have to stick to it. Okay. You have to draw lines in the sand. You can't do this emotionally. Okay. I urge you. And this is true of the stock market as well. People have lost their entire livelihoods by trading emotionally, by not making a plan and not sticking to it. Okay. So please, YouTube channels are great. Books great. Reddit is great, but take all that information and formulate your own plan. Take a pen, take a piece of paper, say, this is what I want to do. This is how much money I can commit to it. This is what I'm going to buy, how I'm going to store it, how I'm going to liquidate it, all those things. Okay. Now let's go on to active investing. Before I get into active investing, I am mainly a passive investor. I have nothing against active investing. Okay. I do not consider active investing flipping or reselling a product. Okay. Those people have an extremely short period of hold time. Okay. Active investing is, you might be, I consider it like under a year or two in terms of holding. So you're really, you're really trying to time the market. That's what you're really trying to do. And I think personally, there's a lot more risk involved. When you're talking scalpers and flippers, these are people going to Walmart, Target, Costco, Best Buy, Sam's Club, trying to buy product. They have all they know is that the product's hot. These people typically do not know why it's hot or what's going on in the market. They just know they can try to turn and make a small margin, and it can be done. But oftentimes what happens there is there's a lot of other people trying to do the same thing, and you're often left holding the bag. Or the market shifts slightly in that margin because you're really looking at a small margin. That margin is eliminated, and you end up holding a product then that you either have to sell at a loss to get your capital back, or you're going to have to hold for a period of time until that market turns around on you. So active investing does take a significant more time. It's more transactional heavy. So to try to increase your margin, or at least, you may not have a margin. So in order to get a volume of cash as a return, it's kind of transactional heavy. And when we're talking about transactions, and I talk about this often, whenever you buy or sell product, there's risk there. If I buy even from the most reputable source online for sealed booster boxes, there's a risk it's damaged in transit. There's a risk maybe there's a packing error and they didn't give me my correct order, and there's a hassle involved with trying to rectify that. Okay, and the same thing when you try to liquidate. There's a hassle, there's customer service that is required from you by eBay, by TCG Player, by wherever you're selling, that you have to provide a certain level of customer service. So the more transactions you do, the more risk there is there. Okay, it's an inevitability when you're buying or selling product online. Okay, Murphy's Law will come into play there. And this does require significant research. You have to keep your ear, nose to the ground and know what's going on, because the market, you really are timing the market. And so you have to know when things are shifting. You have to try to predict when things are going to shift, which is almost an impossibility in Pokemon, because there's no art meta necessarily, right? The market just kind of shifts when someone starts seeing, when a price starts rising on something. If someone tries to, buy out a card or a box or something like that, the market sees that and then it shifts. It's not that everyone says, "Hey, I like this alt art" at the same time. It starts to run up a little and everyone's like, "Oh crap," and that pulls a lot of focus into that specific card. And active investing is really more situationally profitable. And again, I definitely consider myself a passive investor. There are times in the short term where I'll offload a box or two while I feel the market is fairly red hot. I did that recently for Surging Sparks. I liquidated a little bit to free up some capital to push towards Prismatic Evolutions. I felt I didn't want to miss out on a couple boxes worth of upside potential on Surging Sparks. However, we already had I had 100% increase on those boxes, so it was worthwhile to get a little bit of cash back as well as some margin to be able to reinvest in something that has a lot of potential still. So I still have an allocation of Surging Sparks boxes that will ride for a long period of time. So there's definitely short-term things I will do sometimes depending on the market. However, the big thing is that I don't care. I don't care if I've been buying Pokemon boxes at $100 a pop for years and they don't do anything. I remember buying Fusion Strike boxes for under $100 a pop and they didn't do anything for a long period of time, and I was okay with that. I'm okay if it goes up. I have boxes that have tripled, quadrupled in price that I still have, and they'll go down, and sometimes they'll crash back to the bottom, and I am completely okay with that. And that doesn't make me special in any way, shape, or form. That is literally time, wisdom, and mistakes together. Okay, wisdom is really time plus mistakes equals wisdom. Okay, so I'm not special. I've just been through it enough that you become numb to it. I've been through it in the stock market for a long period of time. The difference is when we're talking about Pokemon, especially if you like Pokemon, is you're kind of a little bit invested, at least in the IP, in the product, right? I love Pokemon. It's nostalgic to me. So there's more attachment there, and it can be hard to compartmentalize that sometimes. And so I love looking at the product. I love the fact that I have it. It's something I can talk about with my kids and share with them, but the price I'm kind of disassociated with. I just don't care whether it runs up, left ways, sideways. My time horizon's so long, I just don't care. And again, that's because I've been doing it in the stock market for so long. I've been burned. And again, I'm not some institutional investor or anything. I'm small potatoes. I just happen to like this kind of stuff. So that's active and passive investing. Again, it can be as simple as just not giving a crap. And that's what's wonderful about it is, in this, again, same thing goes to regular investing. You can go out and buy S&P 500 index or ETF funds and just do that every single month for a long period of time, and the market will reward you. And, some people will say, there is a discipline there, right? But discipline's not necessarily active time. It doesn't take active time. Discipline versus time is not, it's not the same thing. Those things to me are, in this, at least in this concept, are exclusive. You can be disciplined about sticking to a plan, and that plan could be not doing anything, right? Your plan could be just, I'm planning to buy boxes, put them on a shelf, and not do anything with them for years. That's the plan. The discipline is sticking to that plan, and that's what most people lack, is the discipline part. They even if they drop a plan, they don't stick to it. They emotionally invest. They say, "Oh, I doubled my money. I'm gonna let it go." I mean, look at take Evolving Skies for instance, right? There was one point in time you could buy Evolving Skies booster boxes at $100 a pop, and then there were many people when they ran up to 200 and said, "Oh, I've doubled my money. I'm gonna get out. I don't care if my plan was to hold it for 5 to 10 years. I'm getting out." And I guarantee you, every single one of them is kicking themselves right now, okay, with a possible 10x return on that product, okay? So it is as simple as how I say, don't give a crap about it, just buy it and put it away. But the discipline part, that's the hard part. That takes time, that takes experience. That is it for this one on PokeMarketLab. We'll see you on the next one. Take care.